Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about how I turned $1,000 into over $10,000. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And guys, this is not going to be an easy way to get rich quick. This is swing trading. It's a job. It's a career. It took me 6 years. I've been a full-time trader for over 6 years. And with that being said, we do have an amazing school where I teach people how to trade. It really cuts down on that learning curve. We have private live streams, we have quizzes, lectures, a group chat. It's absolutely fantastic. You guys can use code YouTube to get 20% off. YouTube, all caps. Check it out. But guys, let's dive into this here. So swing trading, what is it? Well, in simple terms, swing trading, you buy a position, you hold it for more than a day, but less than 1 year. When you buy a stock and you sell a stock during the same trading day, that's a day trade. It's a different strategy and mindset. Now, when you buy a position or a stock and you hold it for more than a year, that's a long-term investment. You know, you're holding it through several earnings reports in most cases. You're a lot more devoted for that stock. You know, fundamentals start really playing a factor on if you should hold it. So on average, I do hold my swing trades for about 6 to 9 days. Obviously, there will be times where I buy and sell, buy today, sell tomorrow. And then there will be times where I buy today and hold it for a couple of months. It all depends on the time frame and the strategy and mindset that I do have with this position. But starting off with, what do I look for swing trade? So I love stocks on some sort of upward trend. And that's kind of what we saw here at Palo Alto Networks. This was a recent swing trade that we took. We called it out in our group chat. And you guys can see the stock went from about 380 all the way down to lows here at about 260. Now, you guys see this red line. Now, this red line is what we call a moving average line. It's actually the 200-day moving average line. So as we look at it in the past, you understand that we've seen that tendency of it getting a decent amount of buying pressure at about 220 all the way up to about 240 in value. On top of that, we've also noticed it use this blue line here as support as well. So it hits it several times, right? You guys can see it hits it several times, establishing very hard support for this company. Now, you guys can see on an earnings, it got a decent amount of sell-off, hit that 200-day moving average line. We hopped in near and around this 272.15 mark and set our profit target for above that 90-day moving average line. Now, when the stocks are, in this in-between area, in between them, we do see tendencies of the blue line here act as resistance, so where we get some selling pressure. And then we also notice that the 200 is support. So we have support, resistance. So ideally, you want to hop in as close as you can on that moving average line. You guys can see we had this fantastic move. We held it for about 1, 2, 3, 4 days here, hit that 90-day moving average line, and we hopped out. The great thing about this trade is we pretty much risked $1 to make $2.50, which is an absolute fantastic risk and reward. Now, you might be saying, Carter, well, does this happen every day where it sells off to a moving average line? Well, you'd be surprised. You would be surprised. The company that we're looking at here is Google. Ticker symbol GOOGL. Now, you guys will notice that we've seen tendencies of it using that 200-day moving average line in the past here, and then it also hit these 90-day moving average lines. We got a recent breakdown down to these 200-day moving average lines. So in a beautiful world here, you could hop in near and around, this 200-day moving average line. You could pretty much set your stop loss, pretty much the max amount of money you're willing to lose on this trade, near and around this 330. I'll probably put it just a hair below it at about 129. And now you're risking $1 to make $18 because we could possibly see that as support move back up to that 90-day moving average line. A very similar situation here that we saw with Palo Alto. Now, this is the thing about swing trading. You might be saying, Carter, well, how do you do this? How do you grow a small account? How do you find these stocks? Well, the biggest thing that I would recommend doing is just practicing. If you're just getting started with trading in general, I would rather see you guys start paper trading and start learning the fundamentals before you guys fund, a Robinhood account or a Moomoo account. Moomoo is the broker I use. I'll put them down below. They're fantastic. But, the thing is I would rather see you guys start learning rather than start trading. Most traders actually lose money. So you got to ask yourself, what do they do? What do the ones that are profitable do to be successful? Do you think they, took shortcuts? Do you think they understand this is a job and you got to put in those hours, you got to practice. Yeah, they do. So that's what I would rather see you guys focus on rather than, just start trading today. But guys, that is it. I hope you guys all enjoyed it. And if you guys want to cut down on that learning curve, let me know and check out my swing trading school. It's absolutely fantastic. And we'll see you guys later. Hit that like button and subscribe, and we'll see you guys tomorrow in the next one. Take care.